New Deep Dive.
Have you noticed the wild swings at the gas pump lately? Or maybe seen a headline about the global economy and just, felt your wallet clench a bit?
Well, yeah, it's hard to miss.
Right. Oil prices, they touch us all pretty much every single day, shapes everything from, well, your commute to how much your groceries cost.
Mhm.
So today we're doing a deep dive into the fascinating, pretty complex world of global oil markets. We're
Yeah.
really focusing on OPEC plus,
Right.
huh?
That's the big player, yeah.
Exactly. We've pulled together some recent reports, from energy news outlets, market analyses, and even statements directly from OPEC plus talks.
Good sources.
Yeah, and our mission here is basically to unpack what's going on with oil production, why prices are shifting like they are, and how these global trade tensions are throwing a huge wrench into everything.
Right.
We want to help you understand the forces at play, without getting totally lost in the jargon.
And it's a really fascinating moment because, like you said, there are these seemingly separate threads, supply, demand, internal politics, trade stuff, but they're all converging right now.
Converging. Yeah, that's a good way to put it.
Understanding that convergence, that's really key to getting why things are so volatile.
Okay, so let's kick off with the immediate big news, the thing that's making waves right now.
The production hike.
Yes. OPEC Plus is set to approve its fourth consecutive monthly oil production increase for August.
Fourth one.
And what's striking is the consistency, right? It's an increase of 411,000 barrels per day. That's exactly what we saw for May, June, and July this year, 2025.
Same number every time. It's not random.
Definitely not random. It's part of their calculated plan to gradually bring back about 2.2 million barrels of production they'd previously held back.
Right, restoring that supply.
And they even moved the meeting for this decision up by a day. It was July 6th, now July 5th. That kind of signals maybe a bit of urgency behind these adjustments, don't you think?
Yeah, it just suggests they want to get this locked in.
Yeah.
And this consistent increase, it's pretty significant. It really signals a strong commitment from OPEC Plus to regain market share.
Especially when you think about prices.
Exactly. Especially given what it means for prices. This strategy, it's already put, substantial downward pressure on global oil prices. More crude hitting the market, prices tend to go down. Simple as that sometimes.
And that phrase, substantial downward pressure, I mean, the numbers really back that up, don't they?
They really do.
Brent crude is hovering around $69 a barrel right now. WTI West Texas Intermediate, the U.S. benchmark, is around $65.50.
That spread tells a story, too.
It does. But here's the kicker. That's roughly a 12% drop in just 1 week.
Wow, 12%. That's steep.
It's the sharpest decline we've seen since, March 2023? Now, OPEC Plus says, they're flexible. They can halt or reverse these increases if the market tanked.
They always say that. Maintain flexibility.
Right. But a 12% slide, that definitely gets your attention.
Hmm.
What else besides just the increased supply could be pushing prices down that fast in a week? Are there other signals?
That's a really good question. I mean, the supply increase is the main thing, the primary driver. But the speed of the drop, it suggests maybe some market anxiety, too.
Anxiety about what? Demand?
Yeah, potentially about future demand, especially with, broader economic uncertainty swirling around.
Yeah.
And looking ahead, analysts, what do they expect? Goldman Sachs, for instance, they're still forecasting Brent crude at $60 a barrel in 2025.
Even with these production increases coming online.
Even with these increases. So for you listening, this translates directly, obviously, to what you might pay at the pump. But it's bigger than that. Businesses are factoring this into their costs, transportation, manufacturing, everything.
Yeah.
It just highlights how these big strategic decisions by groups like OPEC Plus really do hit home.
And that downward pressure, it's not just a market thing, is it? It seems like it's also maybe a symptom of deeper disagreements brewing inside OPEC plus SAC.
Oh, absolutely. That brings us to the really fascinating internal stuff.
The power struggle.
Exactly. The two biggest players, Saudi Arabia and Russia. They've actually taken surprisingly different stances on pushing these increases through so fast.
Okay, so break that down. Saudi Arabia.
Saudi Arabia has really become the main cheerleader for boosting output. They're pushing hard for these 411,000 barrel a day hikes, despite prices falling.
Which seems counterintuitive, maybe.
Well, it marks a big shift in their strategy. They seem to have moved from mainly defending prices, keeping them high, to aggressively trying to get back market share.
Ah, market share.
Especially
Especially
against members like, say, Iraq and Kazakhstan, who pretty consistently pumped more than their quotas allowed.
Ah, the non-compliance issue.
Right, and Saudi Arabia's even hinted they might speed up the increases even more if some members don't get back in line. It's a strong message.
Okay, so that's the Saudi stance. What about Russia?
Russia, on the other hand, they have expressed, let's say, genuine reservations. They seem to prefer a more cautious approach. They're worried about potential oversupply, about prices falling too far too fast.
So a real split there.
A definite strategic division. And it really underscores the complex, sometimes, fractured dynamics within OPEC plus BINC.
So what's the why behind that split? Why is Saudi Arabia willing to risk lower prices?
Well, the thinking seems to be that Saudi Arabia's move isn't just about grabbing market share back today. It's maybe a calculated gamble. They seem willing to stomach lower prices for a while.
To achieve what?
To restore market discipline. To send a really clear message to those members who aren't sticking to the plan. It's kind of a power play within the alliance, prioritizing long-term cohesion maybe, and making sure quotas are respected.
Okay, makes sense. Discipline.
While Russia, maybe because of different economic pressures at home, is clearly more sensitive to the immediate price point. They need that oil revenue now.
Right.
So it really does raise questions about the unity of the whole alliance moving forward.
That's a critical point. I mean, given that difference, Saudi Arabia pushing, Russia pulling back, how fragile is that unity? Could we see, like, a real crack in OPEC plus cohesion if this keeps up?
That's exactly the tension, isn't it? If this internal friction continues, yeah, it could definitely complicate future decisions about production. It could lead to less predictable supply down the road. And, as if the internal disagreements weren't enough.
There's always something else.
There's always something else. There's this major external factor casting a long shadow right now.
Ah, the tariffs.
The looming U.S. tariffs, that upcoming July 9th deadline. The Trump administration has warned trading partners about potential unilateral tariffs, maybe up to 70%.
70%, wow.
Yeah. Now, current tariffs are 10%, and Commerce Secretary Bessent hasn't ruled out maybe a 2-month extension for more negotiations, but still.
Still a big threat hanging out there. So how does that tariff uncertainty play into this already complicated oil market picture?
Well, some analysts are calling it a potential perfect storm.
Perfect storm.
Because these tariff worries, they just pile on top of OPEC Plus's supply challenges. They create huge uncertainty. And potential U.S. tariffs, they're not just like extra taxes on goods. For oil, they could dramatically reshape global trade flows.
How so?
Well, think about it. If tariffs suddenly make U.S. oil way too expensive for, say, a country in Asia,
They'll buy it from somewhere else.
exactly, they'll look for oil elsewhere, maybe the Middle East, maybe Russia. And that reroutes entire supply chains, creates ripple effects across the whole market. We're talking real price impacts.
Like what kind of impacts?
Well, some scenarios. Like a full-blown trade war, maybe 30% tariffs across the board. They could potentially push Brent prices down towards $50 a barrel by 2026.
$50? That's low.
Very low compared to now. On the other hand, a more moderate situation, maybe the 10% tariffs stick around. That might keep prices somewhere around $70. Big difference.
Huge range of outcomes.
And don't forget, we already have existing tariffs complicating things. China put that 15% tariff on U.S. oil back in February 2025.
Right, that already happened.
Yeah, and that's already disrupted global supply chains, forced U.S. exporters to find different markets for their oil.
So this isn't just abstract policy stuff.
Then not at all. It trickles right down. It affects shipping costs, manufacturing costs, impacts the goods and services you rely on every single day.
Okay, so bringing it all together. What does this all mean for you listening? We've seen how OPEC Plus's internal strategy, bumping up production, how market forces are driving this price volatility, and then these looming geopolitical tensions, like the tariffs. It's creating a really unpredictable environment for oil right now.
Very unpredictable.
From OPEC Plus deliberate production hikes and the immediate hit to your wallet potentially to that internal Saudi-Russia tension, and then this heavy shadow of global trade tariffs. It's a lot to track.
It is.
But hopefully understanding these different layers helps you see a bit beyond the headlines, helps grasp the powerful forces shaping the global economy.
And looking ahead, maybe the big question to chew on is this. As the world is grappling with big things like energy transitions, shifting supply chains, how might the traditional power dynamics inside a group like OPEC plus Rus, how might they evolve?
Or even fracture.
Under this sustained pressure from both their own internal disagreements and these external geopolitical moves like tariffs. And maybe even more importantly, what could that mean for global energy stability in the years to come?
A lot to think about there. Definitely something to keep an eye on.
Subscribe. New Deep Dive.